I just said a note. I don't even understand. You guys have the cash or not?
Come again? What did you just get?
I mean, now he wants financing. I mean,
What's the note say?
oh, he's calling me back. I'll call you. You're full of surprises today, aren't you?
Listen, I talked to the guys, and that's what we came up with. I don't know what I'm assuming that they're great preference. So then maybe the only possibility is to do a cash transaction. We would much prefer to do a cash transaction, frankly, but we're not prepared to move very much off that number. So I'm not really sure how productive it's going to be, as I said to you, to start negotiating in small increments.
All right. Well, I mean, look, I think I can get you 50% financing. No, I can't get you 60. No one can get you 60.
I'm sorry?
I think I can get you 50% financing. I can't get you 60. Nobody can get you 60%.
Well, I mean, the seller can do whatever they want to do.
No, you gotta, when you get the bank involved.
No. Yeah, but I can go to, you're saying if you get their bank involved?
Well, you're saying seller or seller's lender provides financing.
Right. In other words, whoever is Bank of America or whoever's in there that would be getting, whoever would be getting paid off with whatever cash is coming in on this deal could keep a portion of their indebted. I don't know exactly what the capital stack still is, frankly, if anything, but they could keep a piece of their money in and just listen. I don't want to tell them how to do their thing.
Right. So I'm saying I can get you 50%.
From them.
Okay, hang on now, but it's not going to be LIBOR plus 350. This is like for a stabilized office building. Are you fucking?
Well, okay, but what I'm saying is the only person that can write. Okay, let's forget for a second, 80%, whether it's L plus 350 or 8% fixed. The only person that could write that loan and still close on Tuesday would be the seller or the sitting lender. You know what I'm saying? And again, I don't know. We never got to the closing statement point, so I don't know what the payoff statement looks like. I don't know if Bank of America still has $20 million on this and they're taking a $10 million payoff, or if Bank of America has $6 million in business or putting the rest in their pocket. I don't give a shit. It's really not any of my damn business. But my point being, that's who could write the loan. Those are the only parties. I'm using Bank of America because I think Bank of America did the construction loan. I maybe had a school on that. A new person couldn't come in and write a loan to close next week. Do you follow what I'm saying?
All right. So why are you asking for a loan then if you have the cash?
Because the numbers don't work without leverage. The numbers work at $105 a foot based on what we think the sales velocity is going to be. I mean, you know what leverage. You know what leverage does to a deal. Leverage can make a deal that looks mediocre work. You know, that's what I said to you. You know, if we buy the thing at a bigger number, and the sales velocity is what we think it's going to be, the returns are pretty pedestrian. But if there's leverage, then fixed the returns. I would much prefer to do the deal cash, but the deal doesn't work at 120 in cash. For us, the deal works at 105 in cash. But rather than just going back and saying, hey, we'll do it at 105.50 cash, I'm trying to create an option and create a dialogue.
All right.
So listen, I'm not trying to be more difficult. That's not what I'm trying to look. If they're able to do it and it changes around the edges, yeah, that's fine. I'm trying to put something out there to create a dialogue. If there's any value to that.
Well, yeah. I mean, we were expecting cash, and rather than you coming to the table with $12 million, you're coming with 5 or 6 or something like that. If these numbers are right.
Yeah, that's correct. And I guess what I'm saying is I'd rather just come with 10 and be done, or whatever the number works out to. We would much prefer to do the cash deal. The numbers don't work for us at that price on cash. If we're going to do cash, we've expressed where the numbers work for us. And I understand, again, as we discussed earlier, that it creates a pretty big gap. But that's what we're prepared to do. So, I mean, I can stand by. What I did is rather than send a termination note pursuant to their lawyer's request, I circled up with my partners and then we discussed it again. And that's what we came up with. So I'm trying to move forwards, not backwards.
Right. I mean, I don't think it behooves anyone any good thing here. Let's focus on getting the deal done, and we've come so far. Everyone's kind of worked with different personalities. We're so close. Now,
very diplomatically.
Yeah.
Okay, so look, there's fodder. If you can do something with that fodder, great. If it needs to change around the edges, then tell me where it needs to change around the edges, and we'll try and move forward. That's where we're at right now.
Well, the leverage is I don't know how that's going to be taken. I mean, we did have a deal that we threw out the guy because he was going to actually not even ask them or the lender for debt. He had some firm that was going to give him debt. So I'm not sure how the leverage is going to work, to be candid, but now,
again, it wasn't a creation to try and move backwards. It was a creation to try and move forwards. But that could bridge the gap between getting them a higher number, and frankly, it's interesting. What it does is interesting. If they're right and the velocity remains brisk, okay, the leverage won't be there very long at all, because what we're talking about doing is essentially 100% release price. We want to create a reserve, obviously, but we're not looking to pay them down a smidge and keep the money. So if they're right and the market remains brisk, then yes, they haven't gotten the cash at closing, but they will get the cash rather quickly. If we're right and the market remains more sluggish than they think it will be, then they're in for longer. So in a weird way, and not this is what they bargained for, but in a weird way, it basically says to them, look, if the building's really worth more, you're going to get more, and if it's not, you're going to have to wait for it. I understand that's not the deal they signed on for. I'm trying to move.
We really have two propositions here. We have one, leverage, which, the jury's still out on that. And I mean, that's kind of insult to injury, you know, like he cuts a deal with you today, and let's say you sell out in a year and he sees you, you know, profit at 100%, so your 5 grows to 25. I mean, shit. I think I'm gonna have a heart attack. I can't believe that. But anyway, you know, now.
Look, I would prefer, I would prefer to buy the deal for cash. I would rather not have debt. But the fact of the matter is, you know, we're running our numbers based on what we think our coverage is going to have to do. That's what makes us comfortable, because we think we're going to have
actually,
to write some checks.
Back to that. I mean, the north side is handed over, and you're not buying any unit in the north side.
Right.
So how much are you allocating for losses from the north side?
We think that they're going to get steeper. There's already a couple of $100,000 of current arrearage, which we think is going to grow. And I think all men agree that that's going to grow based on the number of units in the MLS and the short sales that are posted there. And we just think that's going to unfortunately be the gift that keeps on giving. We think that we're going to have to pay. We think there's a chance that we're going to have to pay a pro rata share of the shortfall from the north side when it gets special assessed to the south side.
Yeah, but the north side, it's. I mean, if they special assess or however they choose to handle the shortfall, it has to be the unit owners of the north side.
No. But what I'm talking about is the north side contribution to the master.
I know, but that's only 12 cents per unit. 12 cents per unit times 300 unit cannot lead to a couple of thousand. Jesus.
Well, and the AR has grown. It continues to grow.
That 12 cents a unit, is that, because that's what they pay into the master, right, for the gym and the pool and the cost allocated to that. So 12 cents a unit times 300 units is $36 times 12 months. I mean, at best it's $432 a year. It's not a couple $100,000.
No, the total arrearage now, the master is already underfunded by that amount. I'm talking about, I can go pull the AR. It's not in front of me right now, but I can go pull the AR on what the unfunded amount at the association level is.
I mean, even if no one paid from the north side, each year would be $432. At most, it'd be $1,728. That's not being recouped. 12 cents a month times 300 units.
And who's the question? Forget the magnitude. Who's going to pay it?
Well, the magnitude.
That building's not Fannie Maeable. That building's never going to be Fannie Maeable. So that building is just going to get sicker. And as that building gets sicker, if you think that the sickness is not going to bear on the south side, I think that's for the south tower.
No, it says the whole. It says the whole complex. I mean, I read it. I had him send it to me because it was like I was getting information that didn't make sense. So I sat down and I read it.
It's for the south tower.
No, it says the whole building. Now, let me add on. So we've got this leverage option, and we have the other option which we were working with before, all cash. And you came back. I really wanted you to come back with me as to, well, if cash, where we are.
And I will tell you again that maybe we have a couple bullets left, but I'm not negotiating in 50-cent increments. All I've heard is they're not doing it they're not. Well, so now our data points are, I'm not doing it for 125, and they're not doing it for 105. Those are our data points.
No, I don't know what you. Basically, what I said was this. The 105 and the spread, the magnitude of the spread was so large that he was like, well, whoa, are we in the same room? And so he is willing, and I've just sent all this over and called him as well, and then you call me back. as I've said, there's a deal here to be done. Let's all be winners. So he is willing to listen to a reasonable number, and we can renegotiate this on a reasonable number. However, 105 is not deemed reasonable. And
go ahead.
No, I mean, look,
I guess I deem it reasonable. I guess I deem it reasonable.
Well, from what we've just discussed, I don't know who's doing your numbers, but, it doesn't seem like all the information is in the right way, and maybe your underwriting is unduly burdened by this perceived loss when,
My underwriting is burdened by what I think the market value of the property is. That's what this is. This is a number of factors contributing to what we think the property is worth. That's it. I mean, and which we think we're going to sell. Those are those in the 300 and 400 a foot are to me, B plus buildings relative to buildings like Icon or even 500 across the street, which I consider a better building. I consider this a B plus building.
Have you been in Icon?
I've been in everything.
Okay.
I've been in everything. And you know what? And don't listen, I wouldn't be doing this if I didn't like this building. As a consumer, for the life of me, you couldn't pay me to buy a unit in this building, and I can't figure out why anybody would have. That's my personal opinion.
In this building?
For the life of me, I can't figure out why anybody would buy a unit in this building. Because I personally think the floor plans are horrible. That being said, what the fuck do I know? Because 400 people bought them in the first tower, and 200 people already bought them in the second tower. So, the consumer has spoken. I don't have any idea. But if I were the consumer, you couldn't pay me to buy a unit in that building. I think they're awful.
But you live in a house, right?
From a floor plan perspective.
But you live in a house, right? You don't live in a condo.
Yeah, but my point is something different. I would all day long I would prefer to be in a flat with even 9-foot ceilings than something where you walk in and it's sort of like a cave and then it pops to the big ceiling. That's my personal view. I actually find those units claustrophobic as opposed to open. That's what it does for me. That's just my view. It's completely irrelevant to this conversation because, as I said, 500 people have already bought units and thought otherwise. So that's just my personal view. It's got nothing to do with whether I live in a house. I mean, I happen to like apartments, but I would much sooner live in a flat with consistent volume of ceilings.
All right.
That's just me.
So
anyway,
can we get 120 all cash?
No. Well, if you can, you should go sell it to that guy.
That guy was here, and I said to him, screw you, I'm giving it to Scott and Mark.
And I will tell you, Avril, as I said earlier, and you can curse me and not believe me, that if that guy went through the last 3.5 weeks of diligence on physical, financial, and legal, he'd come to the same conclusion as me. And you know what? If you think otherwise, or the Bezos think otherwise, then they should go out and they should sell it to that guy. But
I don't have this another 3 months to invest in this process.
It's no secret that we have exposed the transaction to a number of opportunity funds and hedge funds to bring in as co-investors. Nobody there's an assortment of reasons that nobody wants to do the deal, but nobody wants to do the deal at this basis. Nobody wants to do the deal at this basis.
Well, I could tell you that before you call the hedge funds. No, hedge funds have their own problem right now.
No, listen, there's plenty of well-capitalized hedge funds, some of whom we have been bidding on several other deals down here with because they're evergreen. They want to turn their money. They like this because they're evergreen, but their problem is that they can't pay the ordinary income. But we're getting off the page.
Mark, if this was last year this time and you'd gone to those hedge funds, 25 of them would be running down telling you you're a hero and jumping after you. Since then a majority of those funds have lost 40-50%. Guys who did deals, hedge funds, and look, I talked to a fair amount of them, they're right now getting redemptions, and they're not moving away from their core business. So going to a hedge fund and saying, hey, you've lost 40%, you got redemptions, come and do this deal, we're going to make 50%, is not a value proposition. It would be better if you had a company that was making a widget and you went to that same guy and you said, hey. So that doesn't mean that the product is not proof positive and that there's not an opportunity here.
Listen, we think there's an opportunity here. I'm simply telling you that I think that if you were to expose this, and again, I could be wrong, and maybe I will be proven wrong, I think if you would expose this, that you would find people that were, if somebody was ready to go hard and write a check to buy the unsold inventory, to deal with every circumstance as it is right now, that it would be right on top of, damn close to a shade lower or a shade higher than the number that we put forth. That's what I believe.
I'm a big believer. Look,
and you know what, Bravo, I may be dead wrong. But
no.
That's what I believe.
That's not what we have here, though. I mean, sure, in January, February, that would have been fine, and I could have run my 10 people and say, look, here's the deal. But we've gone... By the way, the Master Association is currently owed $120,000 from the North Tower alone. It's owed at end of March, it's owed $125,000, of which $120,000 is allocable to the North Tower. Now, what is that for? Is that for the full year, last 12 months?
I'm not sure. I just got the gross number.
Well, there's 320 units over there, so 120 divided by 320. That's $375 a unit, but I don't know what period. Okay.
I don't know. It's a whole 56 cents includes everything.
So why not just ask for credit for that?
What's that?
Why not? I mean, before we talked about that, I mean, look, if it was January, February, where we were with the people who were at the table, sure, he can, it'd be like, well, you had option A, B, C, we've got the bird in hand. For you to tell me what's in the bush or not in the bush, I'm not the person that's really concerned with the bush. I mean, come next Tuesday, if we're not successful at becoming winners as a team here, then obviously we have to start thinking about what's in the bush. But until Tuesday, I'm thinking, look, you're committed, you've got a contract, you perhaps have the capital or don't have the capital. And
I can write the check at either amount without a problem and won't blink twice.
Okay, very well. So, but here we have to really talk, if it's a cash basis, because I don't know, I mean, if I was, well, let me not go down that route. 105 cash is not acceptable, and they've said no. But we've got two options, debt now or all cash. But you didn't come back to me with anything on all cash. I mean, if you feel that you're owed 120 from the North for the losses from the North Tower, then okay, why not ask for the 120?
That's one factor that we think is going to contribute to the overall pricing and the overall fall down in velocity of selling these units. It's one factor. It's one factor that contributes the way the prices are lower than we thought. It's one factor that's going to contribute the way we think we're going to get our doors blown off by 1060 for a period of time. It's simply one factor. It's simply one factor. It's not, we'll put that $120,000 in. You just go ahead. We'll put the $120,000 in. We'll make the association whole. What has that proven? It's proven that there's still a bunch of fucking deadbeats in the North Tower, and that it's a growing list of deadbeats every month, then that the association is going to run out of money because it's not reserved properly. It means the services are going to suffer. It means, which they already have, by the way, it means that the overall impression of the building is going to suffer, and the saleability is going to suffer. So this is not a situation where you can, it's not fixed with a simple dollar amount. The overall perception and saleability of the building, in my opinion, will be affected by the continued degradation of the North Tower. So what does that mean to me? It means that I think that there's a window here where you can sell some inventory, and then I think you're going to get stopped dead for a while, and then I think you're going to wait and sell the rest of the inventory. So what does that mean? It means your basis is going to grow. Your basis is going to grow because you're going to carry this thing. Because sure shit don't work as a rental. We all know that, okay? And I don't mean that about this building. I mean that about every one of these buildings because we know that the rental market's going to go to shit any day now, which it already has. So if I've got a growing basis, I got to start someplace where I'm comfortable. And we've expressed where we're comfortable. I mean, I don't know what else to say. We'll pay a bigger number. We'll pay a bigger number if they want to hold paper or get B of A to stay in and hold paper. Otherwise, we're ready to close cash at the stated number. Again, if either one of those scenarios can get massaged around the edges, then I'm sure we can work something out. But it's going to be...
Well, let's massage the cash around the edges.
There's no massaging to do until I know that there's somebody ready to massage with me on the other side.
Well, that's what he's asked me to...
I'm telling you that maybe around the edges we can massage it, but I don't know, is it $1, is it $2, is it $3? It ain't 10, so, and it may not be 5, so I don't know. I mean, I told you this morning we were gonna offer 100. We thought that would just be like ridiculous, and that we were effectively indifferent between 100 and 105, and just sounds a lot better than saying 100. Okay, so in our mind's eye, we've already moved. We've already moved $5 a foot because we just thought it would be just really uber insulting to start lower. But listen, I think this is where we are. The next decision, the next two, whether they want to try and work with either one of those, scenarios.
All right, fair enough. Hold on, let me see what he said.
What's that?
Okay, he says he's not interested in being a lender. And then he says, I thought you made it clear to us before we went to contract that he was able to close.
You know what? If you want to have the able argument, if you want to have a big dicks contest, I'm going to win that one. But this is not about that. You can't win that one against me. I'm telling you right now. And my daddy never gave me $1. Okay, so if don't go there. That's going to piss me off. Okay.
No, that's what he wrote in the email.
Well, but I'm telling you, if he starts with that able shit, the only able he should do fucking Canaan able. I don't want to talk about the able shit. I'm able. I'm uber able. I'm more able. I'm standing. I look out the window and I see a bunch of guys who can't fucking breathe. I see a bunch of guys who are running away. They're running away from their guarantees and getting kicked off the boards of banks. I'm not in that group. I'm able. So don't let him fuck with me like that. Once I get my manhood fucked with, that pisses me off. I'm able. Sorry.
No.
I'm back. I'm back. I feel a lot better now.
All right, I'm glad we're having a good time here.
I'll sleep on it. I'll be in the same place in the morning.